Good morning, everybody. This is the live market open for December 1st. It's Tuesday. It's a new month, the last month of the year, and we have an even busier day than yesterday and a very busy week in general. I'm Yohay, Elam, Forex, franc, and market movers, doing the show as usual for FX Read. As usual, we'll cover the recent developments and go over some charts and levels in the next 24 hours, and of course, your questions. Good morning. If you can't see the chat box under the video, please go to the address here on the screen, tlk.io/fxstreet-forex-live-video. So yesterday we had quite a few figures released. We had German inflation coming out as expected. It was 0.3 in the national CPI year over year and 0.4 HACP. Nothing surprising, exactly as expected. US Chicago PMI missed. It came in contraction levels, but there was some kind of silver lining and came out with a better than expected employment figure. We had pending home sales, the last housing figure, and not the most important one for October. It came out a bit weaker than expected, but also here there was an upwards revision, so all in all quite balanced. During the night we had some action. We had the Chinese PMIs coming out better than expected, especially the independent one, the Caixin one. It still showed contraction, but a bit better. And no rocking the boat, no worries from Australia, no change in the rate. So let's start with the Australian dollar regarding charts, because that's where we had some movement. Okay, so we had the strengthening of the Australian dollar on this news, on the better than expected Chinese manufacturing PMI. Also the government one was okay, and also the RBA was balanced. So we had another test of 72.80. Okay, we had another move towards this line. We mentioned this line several times in the past because it provided support. It worked as resistance. Most recently, right here in the last week of towards late November. Okay, so we had another test. So far, this line works very well as resistance. No break. 72.74. We're close to this level. We bounced off here the 72.20. We're trading in a high range, but no breakout. So the Australian dollar does have reasons to rise. It did rise, but it can't break resistance, mostly because of the general dollar strength. Yesterday, we've seen a lot of dollar strength across the board. Today, it's a bit weakening, but not going too far. Now, let's talk about euro dollar. Here we have euro dollar. We had a test yesterday of this line 105.66, and we had a dip even below this line, just under 105.60. Currently, we're hovering back up 105.79. All in all, good morning, everybody. All in all, we're still these kind of bounces from the lows are the sort of dead cat bounces. We have the pair grinding lower, looking for support. Big event of the week is, of course, the ECB decision. One of the big questions there is a move by the ECB already priced in or not? I think it's not fully priced in. I think there is more room for the downside. Anyway, the euro dollar is already suffering quite a lot. Okay, pound dollar yesterday with this end of month fixings, end of month movements that we talked at the end of the show. We had the pair eventually dip below 150, but it never went too far. Just did some stop hunting, and we're back to higher levels. Currently just under 151, resistance at 151.15, and support at 150.60. Okay, no news from the UK yesterday, but as I said, the fall was a bit unjustified. The UK economy is doing better than the BOE says, than the dovishness coming out of Mark Carney and his colleagues. It's a good opportunity to start talking about the events of the day, because we have Mark Carney coming in at 9, just after the show. So the events, we have Eurozone manufacturing PMIs during the show. These are fresh figures for Spain, Italy, and then the final figures for France, Germany, and the Eurozone. So we're not expecting big surprises over there. Why isn't it refreshed? Anyway, let's refresh this is the FX Read calendar on Forex Crunch. And yeah, for all the events for this week. So today we have PMIs for Spain, we have at 8:15 GMT, just in 10 minutes. Then for Italy, then for Germany, France, Germany, and the whole Eurozone. Usually there aren't big changes. I don't think it'll have a big impact on the Euro because we already had the preliminary releases from Germany, France, and the Eurozone. And these don't change too much. And Italy and Spain are the third and fourth largest economies, respectively. France and Germany are naturally bigger. Anyway, at 8:55, just after the show ends, we have German unemployment change. Employment situation in Germany is quite good. Last time, unemployment rate there is 6.4%. Last time we had a fall of 5K in the number of unemployed. We're expecting more of the same. Good morning, everybody. Then we have the focus on the UK. Okay, we have Mark Carney, the governor of the Bank of England. He's speaking at 9 GMT, and at 9:30 GMT we have manufacturing PMI for the UK. Okay, why is it more important in the UK than in the Eurozone? Because it's the first and final release. There is no preliminary release elsewhere. Okay. Morning, everybody. Nice to see you all in the room. Looking forward to your questions. So this morning we have some figures from the Eurozone. I would say an employment change in Germany is the most important one. But then the focus shifts to the United Kingdom, and we have critical events over there. Okay, we have manufacturing PMI in the UK. That's the main event for the morning. So for the pound, currently under 151, further levels above are 151.15. I mentioned this, and then 151.60 and 152. On the downside, we have 150.60 and 150 that was challenged yesterday. Okay, now moving on, we have the Canadian GDP. Let's look at expectations here. It's expected, Canada releases GDP every month. This month is a bit more important because it's the last release for Q3. It's for the month of September. And we're expecting a rise, after a small rise of 0.1, now we're expecting no change, 0%, okay? Quarter over quarter, for the third quarter, we're expecting an annualized figure, like in the US, an annualized figure of 2.2%. Of course, this is very important for the Canadian dollar. Let's take a look at the Canadian dollar. Okay, yesterday we've seen it rise towards 134, not going anywhere fast. 133.50 is the current level. I still see this line of 133.70 as some kind of resistance, but more important resistance is 134.60, which is the 11-year high, and support 132.80, which worked quite nicely, and 132.40, which also worked well. Okay, so these are lines to watch. And if we're talking about the Canadian dollar, we must talk about oil prices. So towards the OPEC meeting on Friday, we're seeing the price of WTI sort of stick to the range. Currently, sort of the middle of the range, 41.84, resistance at 42.70, and higher resistance 43.40, support at the very round number of 40. And if, as I assume, and well, many assume that OPEC will not announce anything, not OPEC with other countries, then we'll have perhaps a further fall in the price of oil, and that could weigh on the Canadian dollar. But we have so many events in Canada this week. What else is on our agenda today? The main dish maybe for today, I would say, is the first hint for the non-farm payrolls, the ISM manufacturing PMI in the United States. Okay, that comes at 3 GMT. It's right here. Okay, so in PMIs, the 50 line separates contraction and expansion. Okay, growth and shrinkage of the sector. Last time we were exactly on the border of 50.1. This time we're expecting a small uptick to 50.3, but given some other manufacturing figures, perhaps we'll have a disappointment. Okay, perhaps we'll see a drop from 50. We'll have these headlines saying contraction in the manufacturing sector. So this may sound like bad news if it really comes, but a few things to watch here. Okay, first of all, manufacturing is a small sector in the United States. Like in many developed economies, services is more important than manufacturing. Okay, so we have the ISM non-manufacturing PMI later this week, and this is more important. Secondly, it's important to watch the employment component, okay? Because that's the real hint, so to speak, for the non-farm payrolls on Friday. So if that comes above 50 points, it's not too shabby. It's a really significant silver lining, okay? It sort of balances it would balance fall to contraction. So these are the two things to watch. That's the main event for the day because it's the first hint towards the non-farm payrolls. Okay, let's continue because it's not the end. Before the Fed enters this kind of quiet mode, we have a few speakers. Of course, Janet Yellen later this week. We have mistake here. Anyway, we have Charlie Evans of the Chicago Fed. He's a known dove, but despite being a dove, he said in his public appearances in November that he sees a rate. He sort of accepts a rate hike in December, sort of going along with the flow or with his other colleagues. He doesn't really support it, but okay, he understands the reasoning and he'll go along. Let's see if he repeats this stance. This could also give us a hint towards Yellen's public appearances tomorrow and on Thursday. Thursday is the more important one. And I wrote here that, yeah, Evans, maybe not Evans of the RBA talks. Let's see. Sorry. That's Glenn Stevens. So the governor of the RBA, sorry for this mistake, I copied the same line. So Glenn Stevens, the governor of the Reserve Bank of Australia, he speaks at 11:30. I'm not sure I'll have a lot to add because we already heard him from after we heard the RBA statement, but who knows, he might surprise. The RBA left rates unchanged and basically left the wording unchanged. They said that the Australian dollar is adjusting to the fall in commodity prices, and commodity prices fell a lot in November, okay? During the night, a more important event from Australia is the GDP release. It is now more important because RBA didn't say anything, so the RBA does not overshadow it. Anyway, on a year-over-year basis, we're expecting a small rise from 2 to 2.3%. And on a quarterly basis, after a week rise of only 0.2%, we're expecting now 0.7% quarter over quarter. And this could strengthen the Australian dollar. Will it break above 72.80? Let's see, this is a key line. Next line above on Aussie dollar is 73.60. Anyways, you can see 72.80. Well, we're quite close to that. Maybe we'll see a break soon, but if not, it's 73.60 and 74. On the downside, 72.20 and 71.50. Okay. What else do we have during the night? Yeah, another Fed speaker, Lyle Brainerd. She's also a dove. And let's see if she also accepts a rate hike or not. Okay, she doesn't talk a lot, and usually when she speaks, it's not about monetary policy, but when she did speak about monetary policy in October, it was of importance, okay? And then just as the show begins tomorrow, we have Spanish employment change. I'll talk about that tomorrow. Okay, so let's cover a few charts that I skipped on. Dollar yen. Dollar yen has a clear range, 122.20 on the downside, very clear support. You can either see this as higher lows or more as a double bottom because these differences are not that significant. Currently at 122.92, more or less the middle of this more narrow range. 123.20 is resistance, followed by really strong resistance at 123.60. We had some second-tier positive figures from Japan during the night. Last week we had more important figures, which were inflation, and we had a speech from Kuroda yesterday. And it doesn't seem that the Bank of Japan is ready to act. It seems that they want to see inflation pick up on its own, that they did enough for now, and even though Japan is in some kind of recession, they're not too worried. They have their own measures of inflation, and these are A-okay. Okay, so we talked about euro. No, we didn't talk about the lines in the euro. Okay, Spanish manufacturing PMI rose to 54.4 from 51.9 in October, so that's good news. I don't see a real impact. I live here in Spain, and it's a great country, but it's still the fourth largest economy, and there is a bit less impact. It's the highest since August. I have a different figure now. 53.1. Anyway, slightly better than expected, but nothing too exciting. So anyway, the lines to watch here, when I still see 150, maybe, you know what, 150.60 on the downside. But anyway, we see the pair grinding lower all the time. Resistance at 106.30, but it seems that it's quite hard for the pair to reach out for resistance. The bigger lines to watch on the top side, 106.70, 107.10, and 108.30. On the downside, it's the April low of 105.30 and the 12-year low of 104.60. I believe that if the ECB goes dovish, we could see the pair break below this level. Okay, so we have some figures, PMI figures from the Eurozone, but so far nothing really exciting. And we have the German unemployment figures at 5 minutes before 9 GMT. Okay, anyway, these are the lines to watch. We talked about the pound, we talked about the yen, we talked about the Canadian dollar, the Aussie dollar. Let's talk about the Kiwi. We're seeing a breakout in Kiwi dollar, enjoying some weakness of the greenback, currently at 66.54. We've seen this line here at 66, and yeah, 66 worked as some kind of resistance. We had this sort of 100 pip range between 65 and 66, with 65.50 in the middle. We're seeing now a breakout. A further resistance I see only at 67. Yeah, we can add lines, but it's basically the Kiwi is enjoying some kind of sell-off in the US dollar, and also expecting perhaps today we have, if I'm not mistaken, we have the milk auction today as well in New Zealand. So perhaps after 3 consecutive falls, traders are expecting to see some rise in that. No, maybe I'm mistaken, it's tomorrow. Anyway, Kiwi dollar is on the rise. Dollar Swiss fell from the highs. It was around 103.30, now currently at 102.70. In high range, remember the Swiss National Bank is intervening to weaken the Swiss franc, especially with all this ECB action anticipated. Euro Swiss 108.73 off the highs, but remains well bid. Okay, we have a question here about pound CAD. Let's take a look at that. Pound against the Canadian dollar. We talked about this several times. So it's currently at 201.53, making some kind of breakout of this, out of hugging the 2 level. Support at 199, well, support at 2 basically, at the very round number of 2, and it broke higher. Next line of resistance is at 202.20. Okay, no, I would say 202. Next line is 203. We've seen a lot of we've seen some suffering from this cross because of the weakening of the British pound. I believe this weakening might be over after the end of month fixings, and I'm bearish on the Canadian dollar because of oil prices. So I believe there is a potential to see the upside here to 202 and then 203. On the downside, we have 199.10 and 2 as support. Immediate support is at this kind of line here at 201.20, more or less. The question, do I use Fibonacci? No, I focus on fundamental analysis. And regarding technical analysis, I use just basic support and resistance lines. That's my style. And yeah, the big focus is in fundamentals, the bigger moves in the markets. Okay, so to answer your question, any more questions? Let's cover other currency pairs as well. We have euro pound. So we're seeing some kind of recovery of the pound. That means a weaker euro pound. Also, we had this pair rise from the bottom from 69.80 because of this, as I think, unjustified rise of unjustified weakness in the pound. Now we're seeing the euro continuing to struggle and the pound making some kind of recovery. And yeah, so it's 69.80 to 70.40, and further support 69.40, resistance 71.40. The question about the IMF accepting the yuan really mean? Well, that was big news yesterday, that's right. It's important news because, first of all, what China did in the summer, what they wanted to do is receive this acceptance of the IMF to enter into the SDR. That's part of the way of globalizing the Chinese economy, making the Chinese yuan reserve currency, okay? When they did that, they enhanced the band in August, and they let the yuan depreciate just a bit, but that caused panic. They said, okay, the Chinese authorities are weakening the yuan because they want to support their export model. They're not ready for transition. The Chinese economy is doing bad. It's a sign of panic. Since then, they stabilized it. They stabilized the peg more or less to the US dollar, and but they did widen the band. Yesterday's news was not unexpected because the IMF already hinted to the Chinese authorities about a month ago that don't worry, it'll be all right. They'll be included. I think it might have long-term implications. They didn't mention it as the big news at the beginning of the show because it did not. I really can't see any impact on currencies. First of all, because it was expected, and secondly, we really didn't see any impact. So, in the long term, it means that China's role in the world continues to increase. If China, well, indeed does a good transition and moves into more into services and more into consumption, less export. Of course, other Asian economies can grow, and this is also good for Japan, good for other countries, good for countries exporting to China. But an immediate impact on currencies, or in the next few months, I don't see that. Well, we can revisit this topic, of course, in the future. Currently, I see no impact. A question, in terms of pips, how much do you see euro dollar falling in the ECB event? Do you think euro can pop back up if Draghi under-delivers, if there is no expansion of the QE to 70-80 billion and no deposit rate cuts? How do you trade the event? What are your levels to watch ahead? Okay, so let's do another ECB preview. I have let's look at the levels. 105.84 at the moment, 105.60 support, 105.03 further support, and then 104.60 resistance, 106.30, 107.10, 108.30, sort of the bigger lines. Okay. Okay, let's actually start with your question. How much do I see euro dollar falling? A lot. Now, to put it more seriously, I see it falling some 200 pips perhaps, but that's sort of a wild guess. I see it breaking below the 12-year low of 104.60, reaching new levels, but not parity. Okay, so I'm in line with what Goldman Sachs says regarding the ECB. I think they'll surprise to the downside. I think Draghi has a tendency to under-promise and over-deliver. Okay, so the slide you're seeing now on the screen refers to the news that we had last week, and we don't have any change since then. So three things to watch, maybe. First of all, expectations stand on a negative deposit rate of 0.30 instead of 0.20 now. Here, I believe that the ECB has more room to cut because in Switzerland and I think in Denmark, we have 0.75 negative, okay? So there's room to cut further, not 0.30, but perhaps 0.40 or 0.50 negative, okay? Regarding QE, here there are more limits because there's political resistance and because there are less things to buy. So less assets to buy. That's why there were rumors last week about the ECB buying corporate bonds or municipal bonds. And but we have, well, three things to watch here. First of all, if they do cut the deposit rate more than expected, that means they can buy more bonds. Why can they buy more bonds? Because the ECB already buys bonds with negative yields, okay? And what is the negative limit? It's the deposit rate. It's the minus 0.20. But if they sort of cut the floor further below, and it falls to minus 0.40, minus 0.50, you have lots of German bonds, for example, short-term, but not only short-term, also French, also other countries, which now become eligible for ECB buying. So you have more bonds to buy. And so it can, of course, enlarge QE. And the third, so negative deposit rate, QE. And the third thing to watch is what the ECB says, what Draghi says. Is it the big move, or are they ready to do even more? Okay. When I speak about more, it's something I didn't mention is extending QE beyond September 2016. These are only words, okay? You can tell markets now you're extending it to 2017 or not extending it, and eventually when the time comes, the ECB can change its mind to both directions. What's more important is the negative deposit rate, which changes immediately, more or less, or in the next month, and the amount of monthly buys. But if Draghi tells markets, okay, we cut the deposit rate, we enlarged QE, or even didn't enlarge QE, anyway, we're doing something now, and we're ready to revisit the policy again in January, in March, in the next meetings, that's already much more meaningful. That leaves the threat, leaves the dark cloud, continues the pressure. Because let's see what happened now. We've seen the euro weakening, not only against the US dollar, weakening in general, because of this threat, because Draghi said we're going to act. Of course, if he, as you mentioned, if he underdelivers, if they don't act, he's deemed uncredible and the euro can rise back up. But if he does something now and says we're going to act further, that could have a bigger effect. And I think that's totally not priced in. So regarding your questions, I would see euro dollar fall below 104.60 and perhaps reach, maybe not this week, maybe next week, maybe the following one after the Fed on December 16th, reach 102.50, 103, low levels, but not parity. Goldman Sachs says the ECB is worth 200, 300 pips, and then the Fed is worth another 200, 300 pips. Bottom line, parity by the end of the year. I disagree. I think the Fed is mostly priced in, so we might see another downside reaction from the Fed because it's still a historic event, but afterwards we could see the dollar weaken once again. So I hope this answers your question in full. I dedicated quite some time to this because this is undoubtedly the ECB meeting is the key event for this week. Okay, more questions, more currency pairs. Let's talk about more events this week. So we have talked about, today Chinese PMI better than expected, RBA, A-OK. Carney is the big event for the morning, Carney and manufacturing PMI. Then we have Canadian GDP and ISO manufacturing PMI, the main event of the day. Tomorrow is extremely busy. We have Australian GDP overnight, Eurozone inflation numbers during the morning, sort of the last input for the ECB before its decision. ADP non-farm payrolls, which is a huge hint for the non-farm payrolls on Friday. And we have Yellen talking, not her most important appearance this week because it's only at a conference, but still of importance, and the rate decision in Canada. Also a huge week for Canada this week. We have GDP, a rate decision, employment numbers, and OPEC all in 1 week, okay? Thursday, we have the ECB decision, which we talked about in length. Testimony by Yellen, which is the main event. ISM non-manufacturing PMI, as I mentioned, the main services sector is the bigger one in the United States. And on Friday, we have the news out. No more hints, but the real news, non-farm payrolls, which is, of course, the last key event for the Fed decision and the Canadian jobs report. Okay. Yeah. Let's see if we have more movements on Eurodollar. Eurodollar during the show is making a bounce. I still think it's a dead cat bounce. We've seen similar bounces in the past. We don't even see the pair. The high for today hasn't been even 106. We might see it rise above 106. 106.30 is resistance. I see further pressure coming from in the US session from US figures. Perhaps if we have good figures from Germany, then unemployment change, this could give only a very, very small boost to the euro, just a bit. And if we have a disappointment from the German data, we could have a bigger fall. The market's bias, I think, is still to sell Eurodollar. And it doesn't mean that ECB is priced in. Okay. More questions, more currency charts you want me to cover? Oh, we didn't talk about one of the favorites. Pound yen, the dragon. Okay, so perhaps this unjustified fall of the British pound, as I say, is over. We're seeing the pair bounce off this nice level of 184.30. You can see it tackle this line many times. I still see 186 as resistance, but we can also see here some kind of line at 185.80. Further resistance 188.10, the high of September. Further support is at 183.80. Okay. I see the pair rising because of strengthening in the pound, because once the Fed hikes, expectations move to the Bank of England, and not because of weakness of the yen. I don't see too much weakness in the yen, and that's because the Bank of Japan is not so eager to act anymore. Okay. Yeah, your guess is that German figures will disappoint. I don't know. German figures have been okay lately. They haven't really well, some, yeah, inflation. Yeah, they've been mixed. Manufacturing PMI has been okay. Unemployment has been okay. Let's see if we have a repeat of that. Anyway, currently there's a bias. Well, this morning there is some bias to sell the US dollar, but in general, as you see, the bias is sell the euro. Not sure though if we will already see it this time. Yeah, let's see what happens. Okay. Pound dollar is waiting for Mark Carney. Just under 151. We already passed this line. 151.15 is the line I see here as resistance. Refocusing on the pound. It's a busy week for the pound because we have the PMIs, manufacturing today, construction tomorrow, and services on Thursday. But we don't have rate decision. Rate decision in the UK comes next week. Of course, no change is expected, but because with the new routine of the Bank of England, we have now we have the meeting minutes released together with the rate decision. Saying something about the DAX. The DAX is different from the real economy that gives jobs to people. Yeah, the DAX, as I said, I think yesterday, I don't follow it closely, but one of the things boosting the DAX, the CAC, the IBEX, the FTSE MIB in Italy. Anyway, European stock markets is the ECB's QE. So negative deposit rates punish banks for keeping money with the ECB, and the QE pushes money into bonds, and this money is money crowded out from bonds comes into stocks. Euro dollar rising, dollar Swiss rising, SNB intervention again. I'm not sure there's direct intervention or if the market anticipates intervention. I would say at the moment it's more yeah, but it could, well, yeah, Euro Swiss is rising, so you can blame that on the Swiss National Bank, sort of preempting buying euros, selling francs to preempt the ECB. But I don't have a real report at the moment about, I don't have any kind of real information about the SNB. Let me try to check this out. If we have real data about that. Let's see if we have information about the SNB intervening in markets. We had some figures from Switzerland. Retail sales year over year fell 0.8, worse than last time. So that might trigger some selling of the franc in real markets, not by the Swiss National Bank. But it's not really. Swiss figures have little impact on the franc. More figures. We had GDP from Switzerland. It was flat, 0% instead of 0.2 expected, and 0.2 last time. It's a figure for Q3. But so in general, disappointing figures from Switzerland, but I don't look too much at these figures because I don't see real movement coming from there. Yeah, negative Swiss data. Yeah, that's what I mentioned exactly. Yeah, so this could have an impact, but remember the Swiss National Bank is so active in markets, and the traders expect the S&B to act. So that's why I don't like this currency too much. It's manipulated, if you wish. And you hear U.S. politicians complain about the Chinese manipulating their currency. I think it's I think they don't talk about Switzerland for good reasons because of all the Swiss bank accounts. Anyway, that's what's currently going on. More questions? Yeah, it's Kiwi dollar is rising quite nicely. Euro Swiss, Euro dollar, stable. Perhaps sit stuck just a moment. If you don't have any questions, I'll talk about the Fed just a bit. The Fed this week is also in the focus. Well, ECB is the key event, but with Janet Yellen's testimony, the Fed is in focus, and with the non-farm payrolls, these are the last events. We have the Fed decision in 15 days from now on December 16th. Expectations are very, very it's priced in. If you look at bond markets for a rate hike, bad NFP could ruin it, or some dovishness from Yellen could ruin it. But we had the Fed last time in October hinting about raising the rates in December. It's really strengthened the dollar. And then in the meeting minutes, they explained what they did in October. They wanted to hint. It's not maybe 100% done deal, but if we don't have a total disaster, we'll see a rate hike in December, and we'll see the Fed also telling us that in 2016 it's going to be extremely, extremely gradual. I would say, again, once we have the rate hike, we'll have a knee-jerk reaction on the historic event, stronger US dollar, but later, according to what history shows us, and given that things are priced in, and given that, well, not given, but assuming that the Fed will make it very, very a dovish hike, sort of telling us that they're not going to raise rates too much in 2016, we could see some kind of reversal of this fall. Okay, question I see here about what could go with Aussie against the yen? Haven't looked at that in a while. This was the classic carry trade before the financial crisis. Yeah, Aussie yen 89.45 on the rise. Thanks on the rise just because of the Aussie, because of good news from China, and sort of a no worries approach from the RBA. I think the Aussie is a bit hesitant because of other events in Australia, GDP, and also another speech from Stevens, and of course Aussie, the Australian dollar against the US dollar because of events in the United States. Anyway, support here at 88, very, very clear line, very clear separator of ranges, double top, double bottom, further line here. Actually, this currency pair has, this cross has very nice technical behavior, 89.10, also some kind of weaker line, 90 level, of course, is just very round, and we're close to that. Let's try to look at further levels. Yeah, I see the yen as, well, even though in Japan we're not expecting any extreme action, Australia at the moment looks better. China looks more stable. It's quite a change from previous, from let's say a month ago. So I would say there's more room here to the upside than to the downside. We had a break out of this range, out of 88 to 89.10, which was a very nice range. Further support maybe here at 86.50. I would say 90 because it's round number as resistance, but this might be a stronger line right here at 90.40, more or less, right? So I would say mildly bullish on this currency pair. Okay. Anyway, it has an interesting technical behavior, but also Aussie against the US dollar has nice technical behavior. We mentioned 72.80 line, which is working here quite nice. So you can see here working as resistance in September and now again. Okay. Okay, so it's time for the wrap up for the show. This is the wrap up for the live market open, Tuesday, December 1st. Lots of action yesterday and even more expected today. German inflation came out as expected, not supporting the euro too much. US Chicago PMI missed, dollar ignored that. Pending home sales were sort of mediocre, dollar ignored that as well. Chinese PMI better than expected, especially the independent Caixin manufacturing PMI. That did have an impact, wasn't ignored. The Australian dollar did strengthen to resistance at 72.80, and the Australian rate decision came out with no change as expected, and more or less the same statements as in previous times. So let's start with the Aussie once again. 72.80, will we see a breakout above this line? If we do, it's 73.60 and then 74. On the downside, we have 71.50. Okay, looking forward to today's events. Eurozone manufacturing PMIs so far more or less okay, even better than expected, but nothing crazy. More important event for the euro today is the unemployment change from Germany at 5 minutes to 9 GMT. Just in 10 minutes actually. Euro dollar, of course, the biggest event of the week is the ECB decision. We're seeing it move higher, 105.93, wanting to reach 106. 106.30 is resistance, 105.60 is support. The trend remains to the downside. The bounces, the corrections are shallow, are the dead cat bounce type. Anyway, 106.70, 107.10, 108. 30 to the upside, 105.60 and 105.30, and the downside, more important downside, 104.60, but that could wait for Mario Draghi. Pound Dollar recovering from the lows. As I said, I think it was a bit unjustified, the recent falls, getting closer to resistance at 151.15, further resistance 151.60, 152, support 150.60, and the round number of 150. Big events for the UK today coming quite soon. We have Mark Carney speaking, Governor of the Bank of England, at 9 GMT, and then we have at 9:30 a manufacturing PMI. In Canada, moving to the other side of the Atlantic, we have GDP expected to come out flat for the month, and it's the last month of the quarter. Let's see what happens with the Canadian dollar. Huge week for the loonie, currently 133.37. Support 132.80 and 132.40. Resistance, weak resistance 133.70 and then 134.60. Later this week we have a rate decision from Canada, employment figures, and the OPEC meeting. Moving to the United States, we have the main dish for today at 3 GMT, manufacturing PMI. We might see contraction according to ISM in this sector. But remember, watch out for the employment component. It's more important for the NFP. Okay, and apart from that, it serves as a hint for the non-farm payrolls. We have Charlie Evans speaking at 5:45, Dove, but maybe he's accepting once again a rate hike. At 11:30, Glenn Stevens of the RBA speaking again. During the night, we have Australian GDP. It's expected to rise. It could give a boost to the Australian dollar. At 1 GMT, we have Lael Brainard of the Fed, also a Dove. Let's see if she accepts a rate hike or not. And tomorrow we have Spanish unemployment change. More levels and charts to watch. Dollar yen, 122.90 at the moment, 123.20, 123.20 and 123.60. Resistance, support at 122.20. New Zealand dollar making a very nice move out of this range above 66, further resistance at 67. Dollar Swiss undergoes intervention, 102.82 at the moment. If the US dollar resumes its rise, we could see a break above 103.30. Okay, let's go back almost 106 at euro dollar. And that's it for the wrap up. We have another comment here. German media optimistic about German unemployment data this morning. Well, as I said, looking at the FX rate calendar here, we're expecting German unemployment to come out at showing another fall of 5K in the number of unemployed and the unemployment rate, which is low, and you see it falling very nicely, is expected to remain low. Yeah, German economy is still doing well, despite Chinese slowdown, despite the VW Volkswagen crisis. Things are looking quite good in Germany. This might change, of course, but and not all figures were really good. For instance, retail sales weren't so good, but let's see how things develop. Okay, so I guess that's it for today. Thank you very much, everybody, for coming. Thank you very much for the questions. Wish everybody a safe and successful trading day. We'll be here tomorrow digesting all the events we talked about and preparing you for tomorrow's really even more important events. We have this escalation during the week. So that's it for today. Thank you and bye-bye.